The People's Bank of China has rolled out a string of measures to stimulate the economy. One of the central bank's moves is cutting the reserve requirement ratio by 50 basis points for banks, which could release about 1 trillion yuan for potential lending or investment. Jackie Lin has our top story.
The raft of support measures were unveiled at the press conference jointly held by the People's Bank of China, the National Financial Regulatory Administration, and China Securities Regulatory Commission in Beijing this morning. China's central bank will cut the reserve requirement ratio, which is the level of cash banks need to have on hand, by 50 basis points. That's set to release about 1 trillion yuan in long-term liquidity from banks to the financial market. To lower the commercial bank's cost of funding, the central bank is also lowering the interest rate of 7-day reverse repurchases from 1.7% to 1.5%. To ease borrowers' mortgage interest expenses, mortgage rates for existing home loans are expected to be lowered by 0.5 percentage points on average. The new mortgage policy is expected to benefit 150 million people, or 50 million households, and save the interest expenses for households by a total of around 150 billion yuan every year. The minimum down payment ratio for both first and second properties will be unified, with a nationwide minimum down payment ratio for second property to be reduced from 25% to 15%. Pan Gongsheng, governor of the People's Bank of China, hopes the new policy can boost the country's economy. Pan said the moves will balance the banking system's robustness and the need to boost the country's economic growth and market confidence. Tommy Ong, managing director of a financial consultancy company, said more complementary stimulus measures are needed to maximize the effectiveness of the policies and to maintain the GDP growth rate at 5% to maintain market optimism. They include the issuance of consumption vouchers and bonds. Jackie Lin, TVB News.